Hello friends, I hope you all are doing well and staying safe at your own place. I, CA Pujin Kapadia, welcome you all on my today's lecture on the subject Banking Paper 6. Friends, as you all are well aware, we had already completed 2 units of our syllabus. First was Central Bank and second was Payment Bank. Today, we are going to commence with the new unit of our syllabus, the name of which is reflected on your slide. It reads as Non-Performing Assets, popularly known as NPA. Yes, friends. So today we are going to commence with the topic of non-performing assets. Basically, today we are going to cover three important things. First is the introduction. Second is meaning, and third is identification of non-performing assets. So let's commence with this chapter. The first topic is introduction. First point I have written over here is RBI introduced NPA norms, that is non-performing asset norms, based on the recommendations of Narasimha Rao Committee. So the first point you need to remember and memorize is that by whose recommendation RBI has introduced NPA norms? Answer is Narasimha Rao Committee. If you can recollect, when we were studying the topic of payment bank, it was the outcome of Nachiket More Committee. Remember? Similarly, NPA norms are the outcome of the recommendations of Narasimha Rao Committee. This is your first point and a short question. Second point is main intention was to disclose the correct picture of profit and loss of a bank by applying prudential norms for. So basically, why RBI has introduced this NPA norms? The main intention behind introduction of this NPA norms, that is identification and disclosure of non-performing asset, was mainly to disclose the correct picture of profit and loss account of the bank, to disclose the true profitability of the bank by applying prudential norms. These are basically certain norms that we are going to deal in the future in the upcoming slides. Basically, this prudential norms basically are with respect to three important points. First is with regard to income recognition. Now, what is income recognition? Let me brief you out about the same. Income recognition means when you are going to recognize the income in your books of account. Now let's take the scenario of a bank. Bank gives loans and advances. Now in this particular case, what is the benefit to the bank? Bank is going to earn interest income on that particular asset, that is the particular loan on advance it has given. Now in this particular case, we need to identify when we should recognize the interest income in the books of accounts of the bank, whether immediately, whether when it is due, whether when it is received, when. Fine. So basically this first norms with regards to income recognition talks about when to recognize the income, in our case interest income with respect to bank. This is your first point. Second point is with regards to asset classification. Now you all know for a bank the loans or advances which are given is nothing, it is an asset. Now how to classify that asset? We are going to basically deal with this particular topic in the later slides, like classification of assets. Assets are broadly classified into two types: performing assets and non-performing assets. And then on the basis of the overdue period, we can classify it further into various kinds of assets like standard asset, substandard asset, doubtful assets, loss assets. Don't go deep much in this particular point as of now, because we are having a separate long question on this particular topic. So I'm going to deal with this particular topic in that particular slide. So second point was basically with respect to asset classification. The third one is with respect to provisions on advances by the bank. Now this point is basically talking about the provisions which is supposed to be kept. Let me give you a simple example. When you do credit sales, data are created in your books of accounts, right? Now you create bad debt reserve, that is provision for doubtful debts, which basically signifies if you feel that you are not in a position to recover the entire amount on a prudence approach, what you are going to do is you are going to create a provision, say 3% or 5% of your total debtors. Similarly, when a bank feels that it is not possible to recover 100% of the loan given to the customer, it on the basis of the classification of the assets create appropriate provision in the books of accounts. So basically the third point deals with provisions on advances by the bank. So in this particular point, we have seen that basically what is the main intention by RBI to introduce NPA norms? It is to see that banks show true profitability, disclose correct profit and loss of the bank. How? By applying prudential norms on three important aspects. First is income recognition, second is asset classification, and third is provisions on advances by bank. So till now we had covered two questions. First was name of the committee on whose recommendation NPA norms were introduced. So answer is Narasimha Rao Committee. Second is prudential norms are with respect to three important topics. First is income recognition, which basically talks about when should I recognize my interest income on any loan or advances as a bank. Second is asset classification. That is on the basis of the nature of the asset. That is how much amount is overdue for how many period. Fine. We are going to classify the asset into performing asset or a non-performing asset, which we are having a separate answer for the same. So we are going to deal with the same in a later slides. And the third one is provisions on advances by the bank. That is when bank also feels that it is not possible to recover 100% of the amount of the loan it has advanced, it also creates provision for the same so that it can properly record the same in its books of accounts. Third point is when I'm talking about asset classification, then this assets classification need to be done on the basis of objective criteria and record of recovery. Now I have bold two important words over here. First is objective criteria. Objective criteria basically is the opposite of subjective criteria. What is subjective criteria? Suppose I am the person who is giving the authority that I have the right to classify the asset. Now whatsoever I feel correct, I am going to classify on that particular basis. So it is my individual opinion. Now instead of me, if any other person is given that authority, he will classify the assets on the basis of his own knowledge. So basically this is known as subjective, which basically differs from person to person. But actually when we are going for asset classification, we need to adopt objective criteria, not the subjective criteria. So objective criteria basically talks about you need to follow the set of rules which are being mentioned in the prudential norms. So you cannot use your own knowledge. You need to follow the specified criteria which is already being defined. As a result of it, the first point for asset classification is you need to do it on the basis of the objective criteria. And second is record of recovery. This point basically talks about whenever you advance money to the customer, he needs to pay probably every month in form of EMI, the amount of principal, and the interest in form of installment. Now we need to check whether the recovery is regular, then we'll classify it in different bucket. If it is irregular, then how long it has been irregular, whether the customer is not paying for 30 days, not paying for 60 days, not paying for 90 days, not paying for 1 year, not paying for 3 years, how long. This is basically the record of recovery on the basis of the days overdue, that from how much time he is not repaying the installments, we are going to classify it into various category of the assets. So basically at the time of doing assets classification, we need to focus on two important points. First is objective criteria, it is laid down rules and regulation, and second is record of recovery, that is whether the recovery is standard, regular, or whether it is irregular. If irregular, then since how much period it is not being recovered. So basically this is about the assets classification. Next point is provisioning. I talked about the provisioning, that is whenever you feel that you are not able to recover the entire amount, you make provisions in the same way as you make provision on the debtors. Fine. So basically what we are going to study over here is provisioning needs to be done on the basis of period for which asset remained non-performing. So first of all, for this you need to understand what is NPA, that is non-performing asset. I told you asset can be broadly classified into two types. First is performing asset and second is non-performing asset. Now what is non-performing asset? I had discussed this point at the initial lecture of mine when I was discussing the syllables of banking 6, under which we had learned if an account stays overdue for more than 90 days, 90, yes friends, when my account stays overdue for more than 90 days, which means for more than 90 days, I am not either receiving my total installment or the principal portion or the interest portion. If anything is overdue on that particular loan will be classified as non-performing asset. Don't worry, we are having the next slide on the meaning itself, but this is just to explain this particular point. So first point is, we need to consider the period for which the asset remained non-performing. I came to know that since more than 90 days, this asset is not recovering a single penny. Now, in this particular scenario, I need to classify how long this asset has remained NPA, whether for 1 year, whether for 3 years, how long. On that basis, there are different provisional percentage. Fine, I need to make provision for 3%, for 5%, 20%, 40%, 100%. How much provision? So basically, it is being already set in the prudential norms. Fine. So we are going to adopt the objective criteria and directly apply that percentage which is being stated. As a result of which, it becomes necessary to understand from how long my asset has been non-performing. Second is availability of security. Many loans are of the nature which back security against it. Fine. So if I'm giving any kind of overdraft facility, then I may take any asset as a security from my customer. So I need to check whether any security is available or not. And if it is available, what is the realizable value? Which means if I go and sell that security as of now, what is the market rate? What is the amount that I'm going to receive from it? So basically, this all are the criteria which are supposed to be considered at the time of making provision on the assets. I hope you are clear with the introductory 4 points. I'm just giving you a minute. Take a quick overview on this particular slide. Well, I hope you have taken a quick overview on all the 4 points that I have stated on this particular slide. So just reviving quickly, the first point of on whose recommendation these norms were introduced, it was Narasimha Rao Committee. Prudential norms were being disclosed for 3 different things. First was income recognition, second was asset classification, and third was provisions on advances by the bank. When I'm doing asset classification, I need to take care of 2 important points. First, it is done on the basis of objective criteria, not the subjective criteria. That is, I need to follow the rules and regulations which are stated in the norms. And second is record of recovery. It is from how long I am not receiving the money on that particular asset. Second is at the time of making provision. What points I need to remember? First is period for which the asset has remained non-performing. That is since when I am not getting the money. Second is if any security is available or not. And third, if it is available, then what is the realizable value of that particular security. So this is the slide we had taken care of. Let's move to the next topic. This slide basically is going to explain us what is the meaning of NPA, that is non-performing asset. First point I have written over here is asset for the bank is equal to loans and advances given. Just take a thought for a minute. What I want to say over here is whenever I am advancing any loan, fine, to the customer, who am I? I am a bank. Now, when a bank is advancing money to the customer, that money, that amount of loan, that loan is going to be considered as the asset for the bank. So the first point is the loans or advances that are being given by the bank are supposed to be classified as the asset, against which, if I talk about fixed deposit, if I talk about savings account deposit, now all this deposits is something that is the money that a bank is receiving from the customer. So this is going to be the liability for the bank. Just make it clear in this thing in your particular mind. I'm talking about two things. First is whenever I'm giving money, fine, I'm lending money, then it becomes asset. And whenever I'm accepting deposits from the customer, it is my liability. So basically the loans and advances which are given by the bank are the assets for the bank. This is a simple general understanding. Let's take a look at the second point. When an asset ceases to generate income, ceases means when income generation is stopped from that particular asset. When it is stopped that I stop receiving income from any particular asset, or when that asset becomes non-productive. Non-productive is now it is not producing any kind of revenue, then such asset is classified as non-performing assets. So basically this is the general definition of non-performing asset. What is it? When an asset ceases to generate income, that is it stops generating any kind of income, or it becomes non-productive, that is it is not producing any kind of revenue, then such asset is classified as non-performing asset. I hope I'm clear with this particular definition. Yes. So for example, what is the income for me as a bank? Interest is my income. Now if I stop receiving the installment amount from my customer, then I am stop receiving my income. So basically interest income is something that is my receipt, and now I am not receiving that particular income on a particular loan account, then that particular loan account is going to be considered as a non-productive one, and hence I'm going to classify it as a non-performing asset. I hope I'm clear. Okay, let's move to the next point. When customer fails to pay the amount of either installments or principal or interest. See, basically I'm giving you the options, either of anything. Fine. What is installment? It is the total of principal component and the interest component. Suppose if I say monthly basis, I am paying installment of rupees 10,000. Now this 10,000 is going to include 8,000 which is going for principal and 2,000 which is going for interest. So what I've written over here is, if a customer is failing to pay any amount, whether it can be the entire amount of installment, that is if he is not paying 10,000, or principal, that is he is paying 2,000, he is not paying 8,000, or interest, that is he is paying 8,000 but he is not paying 2,000. In short, any amount which is due to be received from him and he is not paying the same on the loan or advance which is availed by him or her for a period of more than 90 days. This is the most important thing that you guys need to remember. What is written over here? I am not receiving the amount of installment or principal or interest for a period of more than 90 days. So the time the amount become due from the customer, he has not paid that amount for more than 90 days. So suppose let's take an example. On 1st January, the amount was due. So I need to consider 31 days of January, 29 days of February, and 30 days of March. So if till 31st March, if I'm not receiving any amount on that particular due installment, then I'm going to consider that particular loan account as my non-performing asset. So you just need to remember the calculation of more than 90 days. 90 days are passed, still you are not receiving amount from the customer which was due to him, then you are going to consider that account as non-performing asset being a bank. I hope I'm clear with this particular point. So normally in a definition, you need to remember, if any asset ceases to generate income or it becomes non-productive. Here, going much technical, it is written any amount, whether in form of installment or principal or interest, which was due from the customer, but he is not paying the same for a period of more than 90 days. So important word over here is more than 90 days, then that asset is going to be classified as non-performing asset. I hope I'm clear with this. Okay. So in other words, I can say any account which is overdue for more than 90 days is NPA. This is short and sweeter one. What I've written over here is if any account, basically here I'm talking about the loans or advances account, fine. So if any account which is overdue for more than 90 days, that 90 days have already passed, but since it is overdue, that is जो मिलना चाहिए था वो अभी तक मिला नहीं है, then that particular account is going to be classified as non-performing asset. The last point I've written over here is banks are required to make provisions as per the prudential norms that we had discussed in the last slide for the accounts classified as NPA. As I have told you, on the basis of the amount from when the account was NPA, securities available and the realizable value of the securities, I am going to make appropriate provisions for that particular account. Why do I am making the provisions? I have written over here. Hence, NPA increases the loss for the bank and it adversely affects the profitability of the bank. So basically, NPA is a negative signal for a bank. When a bank says our NPA has increased, this is basically the performance of the bank has deteriorated. So higher the NPA, worse the performance of the bank, and lower the NPA, better is the performance of the bank. So जितना NPA आपका ज्यादा होगा, it is a bad signal for a bank. So what a bank always strive for is to keep the total NPA under control. So NPA basically denotes your loss and it affects adversely to your profitability. So whenever a question comes for 2 marks, define NPA, write the meaning of NPA, you are going to write all the points on this particular slide. Again, I'm giving you a moment. Take a quick view on all the 5 points that I have stated on this particular slide. Well, I hope you are clear with the points which are stated in this particular slide also. So till now we had covered 2 important slides. First was the introductory one, in which we had learned first thing, under whose recommendation NPA came into effect. It was Narasimha Rao Committee. Second, we had studied there are prudential norms to classify NPA. So basically there are prudential norms made for 3 important things. First is income recognition. That is, when should I recognize my interest as my income? Second is asset classification. That is, on the basis of the period of recovery, I am going to classify my assets, whether it is a performing one or a non-performing one. If non-performing, there are various categories like substandard, doubtful, loss. So basically, we are going to deal with this question in the later part. Third is provisions on advances by the bank. As we create provision on the doubtful debts, similarly, if I feel that the advance is doubtful, that is, I am not going to receive 100% of what I have lended, I am going to create a provision on that particular amount. At the time of asset classification, I need to remember 2 important points. First is objective criteria, that is, I need to follow what is being stated, and second is record of recovery, that is, from how long I am not receiving the income. Next is, at the time of provisioning, I need to remember 3 things. First is period for which the asset has remained non-performing, whether any security is available or not, and if available, what is the realizable value of the security. Next slide, we had dealt with meaning of NPA. If it comes for 2 marks, you are supposed to write this particular slide, under which I had explained you when any asset ceases to generate income. That is, generation of income is stopped. I am not receiving any kind of income from that particular asset. I am going to classify it as NPA. To going in more precisely, The time period given over here is more than 90 days. That is, if any account stands overdue for more than 90 days, we are going to consider the same as non-performing asset. We need to create a provision for the same. As a result of it, this is a bad signal or a negative signal for a bank. More the NPA, worst is the performance of a bank. So bank always try to keep NPA under control. So this is what we had studied today. Now let's take a quick test your knowledge series. I am going to give you 3 MCQs. You need to mark correct answers. Meanwhile, after completion of all the 3 MCQs, we are going to discuss the correct answers. I hope you are ready with the same, and so your time starts now. Well, friends, I hope you have marked your correct answers. So let's discuss the same. The first question was, an account is classified as NPA if it is overdue for more than 90 days. So correct answer is option C, 90 days. Second question is, bank is an asset for a bank. I had discussed this particular point. If as a bank, if I'm giving loan to the customer, then that loan given is going to be my asset. While savings deposit, fixed deposit is something that I'm receiving from the customer, so it is my liability. As a result of which, what is my asset? Correct answer is option C, loans advanced. Third question was, NPA norms were laid down as a recommendation of which committee? We had studied it today in the introductory part. It was being laid down by Narasimha Rao committee. So correct answer is option B. But let me discuss all these 4 options. Raghuram Rajan, where we have heard this word, we had studied this at the time of payment bank, that the word payment bank was coined under the governorship of Raghuram Rajan. So when payment bank was introduced, who was the governor of RBI? Raghuram Rajan. Narasimha Rao committee, as we have discussed just now, related to NPA norms. Nachiket More committee was the committee on whose recommendation the concept of payment bank came into force. And Mr. Shaktikanta Das is the present governor of RBI. You need to remember this word also. Who is the present governor of Reserve Bank of India? That is Mr. Shaktikanta Das. So friends, today we had discussed 2 important topics. First was introduction, that is certain short questions with related to NPA, and second was meaning of NPA if it is being asked for a 2-mark question. From the next topic we are going to do in the next lecture, that is basically going to talk about how to identify a non-performing asset and what are the different types of asset, that is the classification of assets. So I would like to stop today here. And so I, CA Pujan Kapadia, thank you all for your patient listening and hope to see you soon in my upcoming lecture. Thank you, friends.